Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. It has been a very interesting 24 hours of price action right across the board. Starting with the Australian dollar, the market dropped like a stone overnight, moving away from the 60-day moving average as well with this downtrend. The objective for this week was at 75.15 or towards 74.55. What it would seem, with the market plummeting overnight, it fell from 75.81 to 74.80, so a full cent, and now reaches its objective after printing the low this morning of 50. Not quite broken this level of 55. The pressure is still on, with an ADX trending, stochastic looking very negative, and also a MACD supporting the move down. I feel the market is not quite looking at the target anymore at 74.55, but more to the fact of 73.75. Any advances on the day should find resistance now or from 75.05. The overnight price action for Euro tested the upside resistance that I was calling at 118.5. It got to 51 and then was stung heavily by the bears. And as you can see, the market plummeted from the level of 118.50 to a low of 115.83. The dollar index surged from 93.16 to a high this morning of 94.99. A clear break above 95 on the dollar index would give further case to the downside to the euro, and the call would be to 112.80. From a technical point, it looks very much on the cards that we're going this way. What triggered this all off was that ECB and the Mario Draghi came out yesterday after keeping rates on hold, that in the statement and also in the news conference is that he voted to stop its massive buy and bond program. But interest rates will remain at record low for some time. The ECB said it would end its quantitative easing bond purchasing by the end of the year and views euro interest rates will be on hold until next year in summer 2019, when they may start hiking. Nevertheless, it has put a very hard dent into the euro and strengthened the US dollar quite significantly. With the upside resistance broken at 110.50, now gives further scope to the 111.15 target that I've been calling this week. With dips to remain shallow, I see a support around 110.0510 and reassess if we reach the level of 115. Now my call for the pound was the fact that the resistance should hold at 134.50, and it did exactly that last night. After printing a high of 46, the market plummeted, not to the objective that I was holding at 132.70, but lower to the region of 132.69, but now 132.42 is the low, with the market still remaining under pressure from a strength of the US dollar, is that we could be looking now down towards the 130 region. The gold outlook did take a challenge to the upside, stabbed at 0607, but failed to uphold after printing a high of 09, dropped back. But still, the market will be on its toes today because there is some reports that we could get a little bit more information on the tariffs that Trump is likely to impose on China, and is still holding $50 billion worth of tariffs. Out of the list that was released earlier in April of 1,300 products, it's now come down to 800 to 900 products. But of course, President Trump still has the final decision on this, and whether or not if he will go ahead. He does want to keep Beijing on his side, and also to the fact he wants to keep his relationship quite healthy with North Korea. So let's see how that plays out. Nevertheless, safe haven demand is still the way to go, I believe, and the market will eventually take out this level of 0607 and look up towards 24 as a potential target. Silver still maintains its bullishness, but do be on your guard. It did take a stab at this trend line, which comes in roughly around the region of $17.15. But nevertheless, the market is still looking like we could potentially rally on to around $17.50. I still quite like this pattern, even though there is a little bit of the divergence here. So do watch out for the pullback, which could be somewhere around 1705, with a base now being established at 1685. Wrapping up with oil, the market hasn't quite broke to the upside, with 66.80 to $67 a barrel holding. Overall, my view is from the pole and the bearish flag is looking towards 62.40.80 with the resistance, which is the broad uptrend, now resistance, holding, as I mentioned, around 67. So overall, I am still negative for West Texas. Crude. Well, that wraps up for today and for the week. So thank you very much for joining me. I hope you enjoy the rest of the day and a great start to the new weekend.